Hey there, everyone, and welcome to The Final Bar. It's Tuesday, August 27th. I'm your host, Dave Keller. I'm the Chief Market Strategist here at Stockcharts.com. Ooh, in a volatile Redmond, Washington. We've had a lot of rain, now some sunshine. It's a confusing time for Redmond weather, confusing time, I would argue, a bit for the markets as well. Good to be back. Thanks a lot for all the nice comments and kind words as I took last week off. We were in Ireland with my family. We actually just flew back all day yesterday, 10-hour flight from Dublin. So might take a final bar nap after this one, to be honest with you, as I try desperately to adjust back to my home time zone. But we had an absolutely stunning experience there. Thanks so much. A number of you actually put comments on our YouTube channel and send notes to our question, our Q&A, email thefinalbar@stockcharts.com with some ideas on things to do. We had a fantastic tour around Ireland, really just took our time and explored around through a bunch of the country. So thanks so much, and really hope you guys enjoyed the special series of episodes we did last week. Focused on really 10 compelling charts, I think, to focus on as we continue through the month of August. As we get toward the end of August here, and August wraps at the end of this week, this week is about, I would argue, two key things, right? Number one is NVIDIA's earnings, which is coming up tomorrow. We're going to look at the chart of NVIDIA together, some of the other technology names as well. And it's also about PCE, which is the latest sort of inflation indicator that we'll get on Friday. Last week, Powell's comments from Jackson Hole really all but guaranteed a rate cut in the September meeting coming up here in a couple weeks. And most likely, maybe a 50% rate cut. We'll see. Maybe Friday's number could help to clarify for investors which 25 or 50 basis point cut is most likely. With that as an introduction, let's get right to the charts here as we get to our market recap. So major averages, to be honest with you, pretty quiet here, right? And looking at Monday's session, we did not have a show yesterday as I was on the plane getting back here. Sort of a distribution period. I mean, the market's obviously not too far off of all-time highs, but the S&P sort of chopping lower through the course of the day yesterday. Today, we opened a bit lower, but then closed a little bit above the zero level. But at the end of the day, not much change. This is sort of a treading water period, which is pretty common for the markets going into a big announcement. I would say NVIDIA's earnings as one of the biggest stocks in the world and one of the biggest names in the S&P and the NASDAQ 100, makes sense the market would be sort of anxiously awaiting their report after the close tomorrow. The S&P finishing up about 0.2% to 5625. The NASDAQ 100 up about the same, and the S&P mid-cap and small-cap index is actually both lower. The S&P 600 small-cap index down about 0.6% today. The VIX continuing to remain sort of in that mid-teens range through the course of last week, and again, into this week. VIX around 15 to 20 is sort of a, uncertain, but overall not too bad type of period. VIX above 20 is sort of that back of the envelope level, which is why the spike aggressively above 20 up into the 60s here a couple weeks ago now seemed incredibly negative, seemed like a huge warning sign for risk assets. It was short-lived, and I would say the spike in the VIX was not surprising in that, it felt like we would have an increase in volatility at some point, as we talked about quite a bit on the show. I would say the extent of the rise up into the 60s, which was one of the highest readings in history of the VIX, was a little extreme, in my opinion. Also surprising was the immediate retracement right back down. I mean, by the end of the day, we were down around 30, less than half of the VIX level as it was intraday. And then, a week later, we're back down below 20 again. So I would say the quick recovery in risk assets, the quick, sort of lessening of the VIX reading, certainly surprising me when you compare historical pullbacks and historical readings on the VIX. But I would say unsettling is the way I would describe this market going into NVIDIA's earnings tomorrow. Let's look at other asset classes here. You can see bonds sort of mixed, to be honest with you, depending on what duration you're in. If you look at the midpoint, sort of the 10-year point, yield slightly higher, 5-year point yield slightly lower, but not a huge change, to be honest with you. Again, the bond market's kind of similar to stocks, sort of treading water a bit. The TLT, which is a bond price ETF, just slightly lower from where we were yesterday. And the dollar about 1/3% lower for the UUP dollar ETF. Commodities a bit mixed as well. You can see gold and silver prices remaining pretty strong here. Gold, right around new all-time highs, continue to push above that 2,500 level and continue to push even higher for spot gold. Silver prices higher as well. Copper prices up today. The things that were down in the commodity space were the energy sides, things like crude oil, natural gas, all to the downside. Energy actually ended up being the worst performer in the S&P out of the 11 sectors, and the crude oil ETF, the USO, ended down a little bit, about 1.7%. Looking at cryptocurrencies, quite a bit of chop while I was gone and not paying a ton of attention to cryptocurrency prices. You can see Bitcoin finishing, as we're recording the show here right after the equity market closed. Bitcoin currently just below 62,000. And through the course of the last 24, 48 hours, Bitcoin has been coming down. We're sort of between 60 and 70,000. We're up around 65,000 now, rotating lower. Currently trading around 62K. Mixed bag right now for cryptocurrency prices overall. Looking at the 11 S&P sectors, again, sort of a mixed bag. 6 in one, half dozen in the other, as my father-in-law always used to like to say. You can see that the 11 out of the 11 sectors, 5 of them positive. Technology, number one, maybe an interesting sort of hint, a foreshadowing of what we may see tomorrow. Certainly if we get a good report from NVIDIA. A number of other technology stocks reporting tomorrow as well. We'll try to get through a lot of those charts if we can. Financials, number 2, up about 0.5%. Real estate and staples, 3 and 4, which are, to be honest with you, fairly defensive sectors. On the bottom of the list, you have energy down about 0.9%, utilities down 0.8%, consumer discretionary, third from the bottom, down about 0.3%. We haven't had a show here in a little while, or a live sort of market recap show. But if you look, our market trend model, this was actually not last Friday, but the Friday before, actually the Friday when we were leaving and going to Ireland on vacation. The market trend model on that Friday's close, about a week and a half ago, actually turned back bullish on all 3 timeframes. So as of today and as of last Friday, we were, market trend model still bullish on short-term, medium-term, long-term timeframes. We look at the chart of the market trend model, you can see what that means. And for me, that basically means the trend is quite positive, which is certainly what it feels if you look at charts on different timeframes right now. Out of the mega cap growth stocks, again, a key group of stocks to follow and pay attention to. NVIDIA up 1.5%. Now, NVIDIA has not been particularly strong in recent weeks going into tomorrow's earnings. Interesting today to see a bit of a bid higher going into tomorrow's report. Netflix up over 1%. On the downside, you can see Tesla down almost 2%. Amazon, Alphabet both down as well. Let's go to a daily chart of the S&P 500 and see how things are looking there. It's interesting. What's happened with the chart of the S&P 500 is it's looked more and more, I would say the last 2 months are looking more and more like previous pullbacks we've had, and it's looking a lot like kind of April and May in so many ways, and in a lot of ways looking very similar to third, fourth quarter of 2023, right? We had short-term pattern of lower highs and lower lows, a clear trend line tracking the highs, which was broken, a break above the 50-day moving average, and then what was key in these previous 2 instances. So again, so far, it's checking all the boxes of a successful pullback and recovery. I would argue that the biggest argument for confirming a recovery is that confirmational signal of moving to a new swing high, right? So, here in May of this year, it's pretty encouraging. But once we break above the March peak and make a new high, that's when it's really sort of okay, we're obviously now, able to follow through, and we're bidding this market to new all-time highs. Conditions are good. You saw the same thing back here in November. We sort of broke above those first couple check boxes. We gapped higher, but then we finally broke above the August-September peaks from earlier in the fall. That's when it really confirmed that the trend was now positive. That's what we've not quite done yet. The other thing that I would tell you is I would say other signals that were really validating the recovery in May of this year, in November of last year, was when the RSI got back to that overbought region, right? When a bullish trend is in play, right? And you're having a nice bullish trend to the market, we should be getting to that overbought level, because that implies that a lot of buyers are really pushing prices higher. So we got there in May, we got there in November of last year. we're not there yet. And that's why I put this sort of, potential bearish momentum divergence. The S&P testing new all-time highs over the last week or so, just below 5650. But the momentum is in a very different picture, right? The momentum in when we're making a new all-time high in July, the RSI is up around 80 plus. You can see here we're retesting those same levels, and the RSI is about 20 points low, around 60. So if we would start to sell off here over the next week or so, this would be potentially a real negative sign that the momentum is really diverging from the action in prices. And if we do get a new all-time high in the S&P, maybe NVIDIA has blowout earnings. Investors are all, jazzed up. We make a break above 5650 for the first time and get above that July peak. I'm watching the momentum to see if it also is breaking out, because if it doesn't, and if you make a new price high on weaker momentum, that is literally textbook edition of a bearish momentum divergence, which is usually not a great sign. That's actually one of the classic topping signals, is the market moving higher on weaker momentum. So a lot of things to think about through the course of this week with some of those big market catalysts to talk about. Excuse me, a couple other macro charts before we look at some individual names here to finish off today's show. I just want to highlight the fact that not last Friday, 4 or 5 days ago, but the Friday before is when the market trend model for me turned bullish on all three timeframes. The short-term model had been bearish from mid-July. Here, the first week in August, the short-term model turns back bullish, and that means all three timeframes on my weekly chart of the S&P are bullish. And for me, that's sort of my permission to buy, to paraphrase Gaddis and Grayson Rose from their book on investing. They talk about sort of that permission to buy. And this is not what they use. They have their own things that they look for. But for me, the market being bullish on all timeframes, meaning the trend is positive, that tells you conditions are strong. That tells you the market is bullish. That tells you should be looking for opportunities. And again, I'm not struggling to find things that are actually doing well right now. To put a finer point on that, if you look at the stocks making new 52-week highs here over the last week, the bottom panel here is showing the number of 52-week highs for the S&P 500 names. And over the last 5 trading days, you can see that's been getting higher and higher and higher. As a matter of fact, on Monday's session, we don't have it yet for today's close, but as of Monday's session 93, that's almost 20% of the S&P 500 members all made a new 52-week high yesterday on Monday's trading session. So you're seeing quite a bit of stocks making new highs. It's just not the names that we're familiar with expecting to do well in a bullish phase. It's not the Meta, Apple, Tesla, NVIDIA, Amazon trade. It's a bunch of other things. It's industrials and materials names and staple stocks and healthcare names that are actually making these. They're making these new all-time highs. One other chart I want to show you just to complete this discussion about market breadth is looking at what I call the new Dow theory, which is looking at the S&P 500 and the NASDAQ. So, when you have a market that appears to be in a position of strength, which I would say, again, based on a pure trend analysis, certainly seems to be the case here for the S&P 500, the question is, do we keep making higher highs and higher lows? And for now, we have not yet made a new 52-week high here since mid-July, right? So over a month later, we're still, testing that new all-time high here in recent weeks. So the S&P has not yet made a new all-time high. The NASDAQ composite has also not made a new all-time high. However, if we look at equal weighted versions of this, what I call a newer Dow theory. So here's the equal weighted S&P 500, which notably already has made a new all-time high, right? The advanced decline line using the New York Stock Exchange common stock only data has made a new all-time high here in the last week. So more equal weighted measures, which are less overweighted to the mega cap Magnificent Seven stocks and more looking at the general health of individual stocks in the equity space, large cap names, generally speaking, they look quite good. Now, the equal-weighted NASDAQ 100 has not confirmed that new high yet, but the equal-weighted S&P has. So the equal-weighted S&P breaking out while the cap-weighted S&P not breaking out tells you about leadership. It tells you it's not the growthy Magnificent Seven mega cap names that are the biggest weights. It's a lot of the other stuff that is doing quite well. So what's really compelling right here is, as a stock picker, I think there are a lot of really compelling opportunities. With that in mind, let's look at some of the names that are on the move in the news, things we should want to pay attention to. 3 stocks reporting earnings among a number of them, and we're sort of out of the bulk of earnings season. Earnings season has kind of wrapped up. So there are types of companies, a lot of consumer names, some technology stocks that don't really go during earnings season. They kind of are sprinkled through the quarter, and that's sort of where we're at. So this week, it's a lot of retail names like Lululemon, Abercrombie & Fitch kind of names, and also some technology. So tomorrow we have NVIDIA, CrowdStrike, Salesforce. Those are three really important ones that I would pay attention to. NVIDIA, of course, the most important. Now, NVIDIA's been really treading water here for the last week. So while today we were up about 1.5%, I mean, just look at the the trading here in the last week. You can see we're just stalled out here, right? NVIDIA has been range bound between around 123 and 130. We are sideways. And again, that's all anticipation leading into tomorrow's announcement. If we do get an earnings win, if we do get a positive surprise from NVIDIA, I think you immediately look to the left and you see these previous peaks around 140, 135 to 140. We had bearish engulfing patterns on both of these tests of that range, right? The high in June, the high in July, both had a bearish engulfing pattern. You also had one here at the peak in late July. I would look to see if you do get a big update, look to see if you get additional confirmation that next day, because that's what we failed to get. That bearish engulfing pattern told us quite the opposite here on previous tests of this exact same range. So if you do get a nice gap to the upside or a move to the upside on an earnings beat, I would see if we can have some sort of follow through at a new all-time high. That would be the bull case. The bear case, unfortunately, is we stall out here. If we get an earnings miss, all of a sudden you have the all-time high in June with the RSI around 80. We would stall out here around 130 with an RSI around 60. And all of a sudden this is a stock making a lower high, stalling, failing to gain a foothold above the 50-day moving average. So if we get a negative surprise, I'd be watching that 120 level to see if the 50-day moving average can hold. And if we would gap much lower, if it's a real bad number or something, then I'm watching the August lows as a hawk. So what's happened with NVIDIA, we're sort of range bound between the August low right around 100, the June high around 140. Which of those levels is going to fail? That break, I think, will tell you a lot about the next big move for NVIDIA. With CrowdStrike, of course, not as attractive as a chart, because while NVIDIA has pushed above the 50-day moving average, now the question is, does it hold it? CrowdStrike's actually below both the 50 and 200-day moving averages. And I would say any sort of nice earnings, positive earnings from CrowdStrike, it's all about that 300 level, which would get us back above the 200-day moving average. Paul Tudor Jones, of course, famously said, nothing good happens below the 200-day moving average. Something like CrowdStrike could be a compelling opportunity for investors. For me, I'm happy being patient and waiting for that move back above the 200-day. If it comes tomorrow, that's when you start to reassess, think about where you may want to take a shot at a name that is starting to improve. Speaking of stocks struggling to regain their 200-day moving average, here's your next case study, Salesforce.com. Salesforce has failed to break above the 200-day moving average after a number of attempts here in early July, after late June, in late July, and now again here over the last couple weeks, we have stalled out, failed to get above the 200-day moving average, with the RSI stalling out around the 60 level. So overall, while we have made a higher low, we haven't had that follow through, breaking to a new swing high. I think this is a really compelling chart above the 200-day, above 270, which will get us above those highs from July and here so far in August. Let's see what else. Other names reporting tomorrow. Bath & Body Works, I think it's before the open tomorrow, if I remember right. Retail in particular has not looked particularly good. Charts like the XRT, not my favorite technical configurations. And charts like Bath & Body Works show you why this space in particular has struggled. BBWI is making a pattern of lower highs and lower lows. What's interesting about this chart is you have a bit of what's called an island reversal, a gap lower, chopping around, another gap higher. So the stock gapping above 32 and running is actually pretty encouraging, but we're still below a downward sloping 50-day moving average. I think getting above there would be compelling. Making a higher low would really get me interested in a chart like this. So I think still quite a bit to prove. It's worth, I think, super encouraging when you look at stocks on the move today. Just a couple to highlight. Resmed, RMD, which is a healthcare equipment maker, known mostly for CPAP machines, right? That you might be familiar with. Making a new 52-week high today. And this is what I'm talking about, right? Charts like NVIDIA and CRM and CrowdStrike, vulnerable, right? You're looking for conditions, technical moves that would confirm that this chart is constructive again. Now, in that environment where those technology names are not quite proving themselves yet, Resmed is literally proving itself day in, day out, week in, week out, as it makes another new all-time high or new 52-week high here just this week. This gets us, really completes this recovery from where we were early 2023, late 2022, selling all the way down to the 130s in late 23, and then all of a sudden fully now recovering back to that early 2023 range. We're up about 7% today, one of the biggest gainers in the S&P. I think that's a great move and a nice follow through. Pullbacks are what you look for in this sort of environment to see if you can get in at a better level. Charts like WBA, which was one of the worst performers in the S&P today, down about 9%. Again, when people ask me about charts like this, I tell them this is why I really am happy not buying things in primary downtrends. When stocks are making a consistent pattern of lower highs and lower lows, when they're below 2 downward sloping moving averages, when the RSI is consistently below 50, I am super happy looking for opportunities elsewhere. One of the great blessings of being an equity investor is we have a lot of different stocks you could buy or sell on any given day. So don't waste your time looking at a chart or debating whether to pull the trigger on a name that really hasn't proven itself. I would much rather look for stocks showing signs of accumulation. I would say WBA with today's move and other similar names like Paramount and others, just confirming why they're in those primary downtrends and really confirming why you're best looking elsewhere until they show that sign of accumulation. Folks, that's our show for today. Thanks so much for joining us here on a Tuesday. Good to be back. Thanks for hanging with me as I took a vacation with my family last week. And again, thanks for all the thoughtful ideas about Ireland. We really appreciate it. For Stock Charts in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good night.